Izzy's. What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a great day today. Bitcoin has been pushing upwards towards the top of this channel. Bitcoin currently, at the time of making this video, trying to push above 43,000, maybe on its way to 44,000. Now, we did speak about in 24 hours from now, we do have the options expiring for Bitcoin, right? And that max pain level is around $41,000. So tomorrow, leading into the weekend, could get a little bit crazy. But with that being said, my friends, I personally believe that April is going to be an incredibly bullish month for Bitcoin because we are actually seeing something that we have not seen in 3 months, finally flashing confirmation, and we're going to talk about that today. We also have to go over some crazy news with the US sort of pushing back against El Salvador's, adopting Bitcoin as legal tender, but I'm going to tell you why you shouldn't worry about that in the long term, because when you actually have a look at what is going on, we've dug up an interview, mind-blowing data if you haven't seen it, and it actually discusses how Bitcoin could go to not just $1 million, but $10 million, maybe even in the next decade. Pretty crazy, not my prediction, but you are gonna wanna stick around to the end of this video. It's absolutely crazy, you need to see this. So, if that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. And once again, my friends, friendly reminder, April 6th to 9th, I will be in Miami for the Bitcoin conference. They are raising these prices in 8 days. If you are interested, they have the Bitcoin conference. They also have the Sound Money Music Festival. Check it out. And if you guys wanna get 10% off, just remember to use the code ZOMBIE, ZOMBI, at checkout. 10% off for you, and you also help support the channel. I do hope to see you there. Now, having a look at Bitcoin, of course, this is the BLX chart. It's always 1 day behind, but you can see that Bitcoin has once again started pushing on this resistance, and currently at the time of making this video, we have actually broken upwards out of it. You can see right here, if we actually zoom in, Bitcoin is once again pushing back towards that $44,970 level. The reason for that is because we are in fact forming this giant ascending triangle. You can see right here, we need to break above this $44,970 level. And I've told you multiple times on this channel that this support is absolutely amazing if you are looking to trade Bitcoin in the short term. The other thing we pointed out was the Ichimoku cloud. Look at all this support that we had down here. And once again, you could see we are in fact pushing up, especially right here, at least minimally, towards that $45,000 level on this cloud. So if you want to learn how to trade, guys, remember you can make money when Bitcoin goes up. And unfortunately, when it goes down, you can short if you're into that. Make sure you check out the tutorial popping up above. And I have over $4,000 in bonuses per each one of the exchanges and a 50% Bitcoin bonus if you go over and check out Prime XBT. So that is that, my friends. But ultimately right here, you can see we are still in this pattern. Now, some people are saying it's the triangle. Some people are saying it's the wedge. Nevertheless, guys, you can see that we are putting in higher lows and we are trying to tread higher, even though we have had these smaller moves. This move looking a little bit more powerful. But as we've been saying, it was looking oversold. It was looking like it was time for Bitcoin to buy. And we had seen a lot of on-chain data that was suggesting that there were a lot of people accumulating at these levels. And as I did say, guys, a lot of these guys were saying, Gareth Soloway, and look, I respect the guy, but he's calling for a potential $4,000 Bitcoin. I'm not even going to comment on that. Just let me know what you guys feel about that. But look at this, guys. The annualized rolling premium in 3-month Bitcoin futures listed on the Chicago Mercantile Exchange rose to 4.8% early Thursday, hitting its highest levels since January 4th of this year. So according to Arcane Research, this could be caused by bullish institutional investors and the ongoing rolls from the Bitcoin exchange traded funds, which might cause buying pressure for farther dated futures. So like I said, we could be seeing a very, very bullish April. And there's so much more to this video, so make sure you guys stick around to the end. But in the last video, we were talking about the Terraform Labs CEO Do Kwon and how there was some speculation that he was sort of one of the whales that was buying. Well, the Luna Foundation Guard has now raised $2.2 billion for its Bitcoin reserve and hopes to hit $3 billion in the short term with a longer term goal of $10 billion. So if they are going to be buying this on spot exchanges, this is definitely going to be providing massive buying pressure, at least in the short term. In response to how they were going to raise $3 billion, they said, well, they already raised one over-the-counter sales of Luna and for Bitcoin, and then they collected another $1.2 billion by selling the UST for Tether. So this is essentially how they're going to get to their $3 billion target. But before we get into the crazy Bitcoin prediction, I just need to talk about what's going on right now and why I don't think we should be worried. So this is essentially what came out. Now, this is the ACES bill, and it actually stands for Accountability for Cryptocurrency in El Salvador, and it had passed a committee hearing over with, the U.S. Senate being ready to vote on it. So, he says, never in my wildest dreams would I have ever thought that the U.S. government would be afraid of what we're doing here. The U.S. government does not stand for freedom, and that is a proven fact. So we will stand for freedom. Game on. Bitcoin is FU money. So the bill seeks to identify and prepare to face potential risks that could accrue to America from El Salvador's adoption of Bitcoin as legal tender. Yesterday, Senator Rich said, as El Salvador has adopted Bitcoin as legal tender, it's important we understand and mitigate potential risks to the U.S. financial system. So this is essentially sounding like the U.S. is scared, right? That they're doing. Guys, again, I know in yesterday's video, I just got to cut everything off right now. They are drilling outside. I'm having a well put in my backyard for a sprinkler system. So if you hear any noise, that's what they're doing, okay? In my previous video, we had guys in the basement renovating the tile. I'm sorry. There's nothing I could do, guys. The studio is in the house, so there's nothing I could do. I try my best, but sometimes this happens, okay? Anyway, way off topic. So getting back to El Salvador, so they said that they adopted the Bitcoin as legal tender, and they are worried about this, but he basically responded and said, okay, boomers, you have zero jurisdiction on a sovereign and independent nation. We are not your colony, your backyard, or your front yard. Stay out of our internal affairs. Don't try to control something you can't control. Now, I want to turn this over to Michael Saylor because, quote, the world is full of examples of empires that have toppled because they did not embrace new technology. And it sounds like, by pushing back on it and not embracing technology, they could be falling into a very similar situation like Saylor has to say right now.
The world's full of examples of empires topple because they did not embrace a new technology. The Romans needed the Etruscans to whiff, And for the Greeks to take their eye off the ball, and then, one thing leads to another. And when you get enough power, you start to become more closed-minded. Right? If you have enough money and enough power, you don't need to learn anything new. What we see going on right now is every single powerful person in the world is asked the question, what do you think of Bitcoin? Everybody, the premier of Russia, every world leader, every major investor, every major influencer, everybody's got to have an opinion. Ask yourself the question, how many of them spend 100 hours studying Bitcoin to form an opinion? I don't think there's a single person with a negative opinion that spent 100 hours studying it. I don't think you're out on the limb there. I just think the world's full of people that they haven't spent 10 hours studying it.
And he makes some really good points, and you are seeing this adoption, this belief, this understanding, even in some of the biggest Bitcoin naysayers truly understanding the technology recently. Look what happened in my previous video when we spoke about what Bridgewater is doing in response to Goldman Sachs over-the-counter trade. You have Larry Fink, the CEO of the world's largest asset manager, BlackRock, saying he believes that actually the ongoing Russia-Ukraine crisis has boosted the case for digital currencies as a tool of settlement for international sanctions. A global digital payment system thoughtfully designed can enhance the settlement of international transactions while reducing the risk of money laundering and corruption, according to him. But this is the video, my friends. This video is from November of last year, and it was on Real Vision Finance, and it was an interview with Brian Estes. And you have to absolutely hear what this guy has to say. He is the founder of Off the Chain Capital, and he really breaks it down. And you read this title and you hear Bitcoin could be $10 million, worth $10 million a coin in 10 years, and you think to yourself, this is ridiculous. There's no possible way. You have to listen to the way he breaks it down, how he relates it to technologies, and how adoption really does happen in a lot of these other products and services and industries. And it is definitely mind-blowing. So I have to play this clip. Now, it's over 48 minutes. Obviously, I'm not going to play 48 minutes. I've handpicked some of the highlights of this, but let me know what you guys think about that.
So back in the early 1990s, so I graduated college in 1990. When I graduated, only 10% of U.S. households owned a personal computer back then. And by year 2000, it was 90% of households owned a personal computer. But when the personal computer revolution started, it started in the very late 70s, early 80s. And so, in 1980, about 1/10 of 1% of households had a personal computer. And so that's what S-curve is. It's the amount of time it takes for a new technology to go from 0% adoption to 10% adoption is the same amount of time it takes it to go from 10% to 90%. So you can go back and look at shipping companies in the 1400s, railroads in the 1800s, automobile companies in the 1940s and 50s. I mentioned computers in the 80s and 90s. And then, I use this for, the computer S-curve, the internet S-curve, the mobile internet S-curve, which is basically Apple, and then now blockchain S-curves. So Bitcoin was invented in 2009. By 2019, 10% of U.S. households owned Bitcoin. And then last year, Brian Brooks, the comptroller of the U.S. currency, mentioned that 15% of U.S. households own Bitcoin. There was a survey that came out earlier this year of 30,000 people that showed 25% of U.S. households own Bitcoin. So we're on this mass adoption, this mega trend of mass adoption of Bitcoin in the United States. And what this tells us, if it took 10 years to go from 0 to 10, then it's going to take 10 more years to go from 10 to 90. So from 2019 to 2029, in 2029, we should hit about 90% adoption of Bitcoin or digital wallets or some sort of crypto assets in our portfolios. And so this mega trend is in place and it's completely unstoppable. And you either get on board or you get run over the next 8 years. And for people that spend the time to learn what Bitcoin is, I think it would be a great benefit to them just to take 20 to 40 hours and devote to this to understand what this is, so that you could participate in this new megatrend.
Yeah, I've always found this chart and this analysis to be fascinating. It reminds me of the joke about Hemingway talking about how you go bankrupt gradually, then suddenly. The idea is that there's this extraordinarily long period of time where technology kind of kicks around without gaining traction. Early adopters talk about it, people who are in the space talk about it, and it seems like nothing happens. And then suddenly, all at once, it seems like it just goes parabolic. It's everywhere. Everyone's talking about it, and the adoption rate goes, as you say, from 10% to 90%.
Mm-hmm. Yeah, another analogy is that new technologies are worthless until they're priceless, and they just flip that fast. The internet was worthless, and then all of a sudden it was priceless. We can't live without it. It's going to be the same thing with Bitcoin and blockchain. 10 years ago it was worthless, and it's becoming priceless.
Talking more about valuation, let's take a look at the historical Bitcoin trend growth chart, because this is also, I think, a very powerful visual. So it's important to note that when we look here at the y-axis, it's semi-log y. This is a logarithmic scale, and that's why you see the price growing linearly on this chart. It's actually growing exponentially. It's just a logarithmic axis. Talk a little bit about the significance of this chart and what it means.
Yeah, so we use 4 models to help us value Bitcoin, and this one's our most simplistic one. Like you mentioned, we just take the 12-year price history of Bitcoin, we plot it out on a logarithmic scale, and we run a regression line through the center of that. And so this basically just tells us, is Bitcoin overvalued or undervalued versus the trend. But what's kind of interesting is that this model is 90% correlated to the historical price of Bitcoin. So it's a pretty good model to use. And so the model basically says that Bitcoin's fairly valued today, and that it should be worth near 80,000 by the end of the year, and 150 or so next year. And in a few years, it's saying that Bitcoin should be worth about $500,000 per Bitcoin. And so, but the price could be 2 standard deviations above the model or 2 standard deviations below that trend line. So it's not really a way to predict if Bitcoin is going to go up from 100,000 to 500,000 in the short term. It's really if you're entering Bitcoin, are you paying a fair price, or is it undervalued or slightly overvalued? And like I said, today it's fairly priced. And so we could use Metcalfe's law to value Bitcoin too. And so the model that we use, this model was invented by Tom Lee at Fundstrat probably about 4 years ago. And so what we do is we square the number of users on the Bitcoin network, and we multiply that times the transactional value of dollars basically going through that network. And when we do that, it comes up with a model, and we compare that to the actual price. And between 2014 and December of 2017, the model and the price were very highly correlated, like 94%. And you can see that with the lines being close together. But what happened in December of 17 was the government basically allowed people to short Bitcoin through the futures market. And so the model and the price started to diverge. And then the U.S. government went on a massive misinformation campaign around Bitcoin. Every time I saw a government official talking about it, they were saying it's used for nefarious activities, it's used for criminals. Regular folks shouldn't touch it. And it was just they were pushing people to, they know they can't stop people from buying Bitcoin, but what they could do is convince them that you really don't want to be involved with it. And so, this made the model value and the price deviate. And so you can see where the two lines separated, and that created a lot of value in Bitcoin. That was a good time to be an accumulator. Because if you believe the model is right, then, and the price is well below that, then you should be buying. And so now the model and the price have come back together because we have actually seen the shorts closing out. So they're having to buy back their Bitcoin that they were short. And we've seen, the U.S. government not be so negative towards it. We have senators today, Senator Lummis and Senator Rand Paul, speaking positively about Bitcoin. There's a blockchain caucus in Congress that's actively promoting, blockchain initiatives and, support of this industry, in Congress. And we've seen miners move from China to the U.S. To get better treatment. So, the U.S. is becoming, more favorable towards blockchain technology and Bitcoin, and this model versus the price show that. Mm-hmm. Yeah. So on the stock to flow model with Plan B, basically stock to flow models are used to value commodities like gold, diamonds, silver, platinum, palladium. And so if you throw Bitcoin into this valuation method, basically what it shows is that gold is the scarcest asset on earth today. It has a stock to flow ratio of 60-1. So the stock is the amount of gold that's ever been mined, that's above ground, that's been stored. And the flow is the amount of new gold that gets mined every year. So it's a 60-1 ratio. Bitcoin's stock to flow ratio is 45-1. And so gold is scarcer than Bitcoin because it's 60-1 divided by is more scarce than 45-1. But after the next halving, Bitcoin halving in 2024, Bitcoin's stock to flow ratio goes to 90-1. And so Bitcoin becomes the scarcest asset on earth in 2024. And so if you look at the total value of gold today, it's worth about 10 trillion. And the total value of Bitcoin is a little bit more than 1 trillion. And if you think about it, if Bitcoin becomes the scarcest asset on earth in 2024, it should be worth more than gold. So to me, that means that Bitcoin should be worth more than $10 trillion in 2024. And that's what this model shows. It just shows it in like a graphical format with dollars. So what this shows is that at the end of this year, Bitcoin should be worth about $100,000. At the end of 2025, it should be worth about $1 million. And the end of 2029 shows that one Bitcoin should be worth about $10 million. And this model is 95% correlated to the historical price of Bitcoin over the past 12 years. So it's very accurate and it's working as clockwork.
Let's talk a little bit about the distinction between price and value as you construe those two terms.
We talked about like Berkshire Hathaway and at 8,300, it was, to me, it was overpriced back then 30 years ago. And a lot of people are thinking that Bitcoin is overpriced today because it's $61,000. But if the value of Bitcoin is only $10 million in 2029 in 8 years, Bitcoin is really one of the most undervalued assets in the world. And that's the way I look at it. I don't really look at the price of Bitcoin. I look at what the value is. And, and I believe that this model is true. I believe that, one Bitcoin is going to be worth $10 million in 8 years. And, if you're paying less than $10 million of Bitcoin, you're getting a good value. And if you're paying $60,000 of Bitcoin, you're getting a great value. So, one of my goals is to accumulate as much Bitcoin as I can. And so, so Bitcoin is the winner for proof of work. And what that means is that Bitcoin is becoming the monetary layer of the world. It's replacing gold as the monetary layer. And I almost look at it as a black hole, and it's sucking in value. It's sucking in value of gold right now. And I think there's the potential of it sucking in value of anything that's a store of value. So rare art, rare cars, eventually, maybe bond market, especially negative yielding bonds, and real estate. Well, I think the value of that store of value will get sucked into Bitcoin. So, I think we revert back to a hard money system like we used for, humans use hard money for 10,000 years. It's only been the last 50 years that we've been on a fiat system or a system based off of trust in your government to issue the money. And to me, that system looks like it's failing. And, just look at what happened over the last year. There's 40% more dollars in circulation than there were a year ago. And, and then you wonder why prices keep going up. Well, prices aren't going up. What's really happening is that the value of the dollar is going down. And, a story I like to share is that, look at your home. For most people, their home value is up maybe 20% over the past year, if not more. And, is your home 20% bigger? Do you have 20% more bathrooms in your home, or did your, yard grow by 20%? If you have a pool, did your pool expand by 20%? Now the answer is no. Now your home isn't providing you 20% more utility. So your home is equal to your home. What's happened is that the value of the dollar has gone down. So it just takes more dollars to buy the same home. And, I don't see that diminishing. I do think the value of the dollar, the Federal Reserve is actively debasing the currency. And we need to own hard assets to protect ourselves. And the hardest asset in the world today is Bitcoin. It's the most scarce resource on the earth, I think. And, everybody should have a little bit of Bitcoin just to protect themselves against, what the Fed calls inflation, but really it's the debasement of the currency. But it's to protect you against economic uncertainty. And, just to have 1% to 2% of your money in Bitcoin is not going to hurt you. As I showed you in the numbers before, just having a small percent actually protects your portfolio. It doesn't make it more risky.
And it's crazy, right? Because when you think about it, you think about even just an app, for example, like Uber, right? And, in the beginning, if you look at some of these charts and adoptions and things like that, you realize that in the beginning, let's say it took them 5 years to get their first 10%. Well, in the next 5 years, they got to 90%, right? Because that's the growth curve, right? It starts off slow and then it goes up and then it kind of goes into like a little bit of an S usually. But let me know what you guys think. You know that I've been calling a $1 million Bitcoin in our lifetime, but I mean, my lifetime, hopefully I live, at least double my age. I hope I get that far. So, within the next 30, 40 years, I don't see how 1 million is impossible. 10 million in 10 years. Let me know what you guys think. But listen, even if there is just a 1% chance of that happening, not being exposed to Bitcoin does seem quite irresponsible, right? Like Rich Dad, Poor Dad author Robert Kiyosaki, who went on a really strange tangent on Twitter like a couple weeks ago. I don't know if you guys saw that. Really, really weird. But anyway, he went on and said, they want to centralize and control everything. So the reason I support Bitcoin and especially blockchain is because it's decentralized. He says that Bitcoin is the people's money and gold and silver are God's money. He says with inflation at a record 40-year high with the real value of $1 decreasing by 86% in the last 50 years, Kiyosaki reiterated that he doesn't save his wealth in dollars. The United States is witnessing historical inflation, and as a consequence, financial professionals are debating how to hedge against inflation in the event that the equity markets continue to climb in 2022. He says, I have millions of dollars in gold, silver, and Bitcoin. We don't save dollars. That's the macro picture. But it's unfortunate, guys. We are early, especially if you guys think Bitcoin is going to go to $10 million in 10 years, then we're definitely early, and 43,000 seems like a heck of a discount at this price, right? But unfortunately, we are still too early. And I know I bring this up and I'm probably beating a dead horse here, but living in New York specifically and just seeing the way that they react to Bitcoin mining and Bitcoin electricity, it really frustrates me. Now, I don't have the article because I'm not subscribed to the New York Times, but you can see right here, the New York Times article claims that one Bitcoin transaction uses 2,000 kilowatt hours of electricity. Now, you had Nick Carter replying to this and saying, how does the New York Times still get this so wrong? This is literally false. A Bitcoin transaction does not require any amount of energy. Hack economics erroneously correlate energy, mainly due to issuance to individuals' transactions, bundles of outputs. There is no requirement. He says, do you want to revisit this? Your statement is literally false. There is no energy payload needed to push a Bitcoin transaction through. And Lynn Alden, she even responded right here, and she said the sad thing is that the article is inaccurate and misleads people, including regulators. The upside, if there is any, is that it's accidental alpha for people who research it and independently then understand how it works. And, getting back to essentially what Michael Saylor was saying, he said, I don't think there is a single person with a negative opinion who has spent 100 hours studying Bitcoin. And it's true. The more you look into Bitcoin, the more you fall down the rabbit hole, the more you realize its value. And this is a true story, guys. When I first got into crypto, okay? Obviously, you learn about Bitcoin, Ethereum. What do? You start aping into all these different coins. You're like, but Bitcoin, that's the old, slow, granddaddy dinosaur, right? We need these newer stuff. We need all these newer things. And you get into them and you buy, and whatever happens, you go through the cycle. And you know what happens, guys? After being in this space for 6 years, and I'm not a Bitcoin maximalist. You know that. I have altcoins. I buy altcoins. I trade altcoins, right? But at the end of the day, you really, truly realize how special Bitcoin is and what Bitcoin actually stands for. Maybe Bitcoin isn't going to solve every single problem in the world, but as a store of value, okay, as non-censorship, able to transmit across any border, definitely easier to transport than gold, right? Good luck getting across the border with a bundle of gold and not getting that stolen from you, right? You guys know how I feel about Bitcoin, but after 100 hours, you truly do start to understand the value of Bitcoin. So just want to kind of point that out. And speaking of innovation, I kind of want to end on a positive note. We have pro-crypto Florida Governor Ron DeSantis announcing a new plan for businesses in the state that would allow them to pay taxes in digital assets. He said this on Tuesday, and also that there were a lot of businesses that want to pay tax in crypto in Florida. So they say that the state is working on it. We also have FIFA. Crypto sponsorship agreement with Crypto.com for the World Cup in 2022. That's going to be some pretty good exposure. And a little bit more lighthearted, rapper and singer Drake has donated $1 million in Bitcoin to LeBron James Family Foundation after a significant victory in an online roulette game on the crypto betting site Stake. So the LeBron James Family Foundation is focused on helping underprivileged students combined with diverse initiatives and support programs. So at the end of the day, guys, you know, innovation is moving forward. They're not going to stifle it. And look at this, guys. We are pushing on this resistance right here. So we need to break above this. We'll have to see if Bitcoin can do it this time. If not, then essentially what we're going to end up doing is coming back down here. Well, honestly, maybe down to the $38,000, $39,000 level. But if we break out of that, well, then you guys know the level that we're looking at after that is $52,000. And I have been bullish on the upcoming month. So even if we do have a little bit of a pullback right here, it could be the last coil really setting up for the Bitcoin price action. So thank you so much for coming back to the channel. You guys rock. You're the reasons that I make these videos in the first place. I love you. You're awesome. And if you are looking to trade, be safe out there. But I do highly suggest that you use or at least watch the tutorials popping up above right here, right now. So until next time, stay crypto. Make sure if you're going to Miami, you use code ZOMBIE. Until next time, peace out, friends.